All right. Good morning, everyone. If you're not aware, my name's Lindsay Toth, and I'm the Marketing and Membership Coordinator at Feed. We just want to thank everyone for joining us today. It's the seventh session already of our Money Matters series. And today I'm joining you from the beautiful Treaty 6 territory and homeland of the Métis in Saskatoon, Saskatchewan. The webinar series we're hosting today is co-hosted by Feed, Female Entrepreneurs in Agri-Food Development, and Tula CPA. Our two organizations are really excited to be bringing you this series, which is designed to unlock financial confidence. This series covers everything from bookkeeping basics to advanced financial leadership. Before we get going, I want to tell you a bit more about Feed. We are a member-based national nonprofit. Our goal is to support the growth of founders and leaders in the agri-food industry with accessible and relevant resources, learning, and networking opportunities. Our program at Feed would not be possible without our founding and funding partners, the Saskatchewan Food Centre and ISED, Innovation, Science and Economic Development Canada. We invite you to submit any questions you have in the chat box for the webinar during the webinar, and questions will be addressed at the end. Finally, I would love to introduce our speaker, Tahira Fadali. Tahira is a CPA and founder of Tula CPA, providing fractional CFO services to high-growth startups and enterprises. She specializes in finance, leadership, strategy, and operations, and is passionate about supporting visionary missions that benefit people and the planet. Previously a CA at KPMG in London, Tahira audited large corporations. She also worked in internal audit and global finance at McCain Foods, where she gained extensive experience in CPG and manufacturing by visiting over 20 sites in 12 countries. Welcome to Hira.
Thank you very much, Lindsay, and thank you to Feed for having me again. I'm going to share my screen so we can dive into today's topic. Okay, can you see that?
Yeah, looks good.
All right. Okay, so today we're going to talk about financial goal setting and financial tracking. So just a note, as usual, before we begin, a reminder that this course does not replace financial advice, and I always recommend seeking professional advice before making any significant decisions for your business. Also, before we begin, I always like to take a moment to pause and recognize that dealing with numbers and finances is hard for business owners because a lot of us were never taught how to deal with these things and the appropriate skills. So if you do feel discomfort before going into any content that deals with financials or numbers, I just invite you to take a deep breath, pause, and reflect on why you might be feeling uncomfortable. Think about what stories or past or mindsets you might have about money or finances or numbers that may have been holding you back in the past. The first step is really to recognize and appreciate what's actually going on. So again, if this resonates with you, pause, take time to reflect, do anything you need to do to ease your nervous system. And then once you've kind of caught up, I'd like to always say that send an invitation and ask you about could you potentially shift your perspective about numbers and finances and money. Um, you know, uh, a switch in a mindset is to, and what I believe is that everyone is actually capable. It's just a matter of learning a new skill set and then practicing to be successful. So with that, I'll turn to the next slide. Okay, so the three things we're going to talk about today are one, we're going to spend some time talking about financial goal setting. Then we're going to go into financial planning, and I'm going to show you a tool that you can use to create a financial plan in your business if you've never done one. And then we're going to talk about financial tracking, and I'm going to show you I'm going to talk about KPIs, and I'm going to give you a tool that you can use to track some important metrics on a monthly basis. So let's start with financial goal setting. So why should we set financial goals? So one, knowing your why. So, knowing what goals you have, those that can kind of become your why into why you're doing things and really focus on what to do. And this allows you to have a plan in place. And then, we have these goals sometimes and we think about them in our head, but once we actually kind of formalize them as goals, we can actually put a plan in place, and that's actually how things are going to happen, right? We all know probably from experience from business, like what you focus on, you need to focus on something and put a plan behind it for anything to actually materialize and happen. So that's why we set financial goals as well. Financial goals are the same as any other goals in our business. Um, and then, I also think that, financial goals are sometimes not written down and they're kind of just ideas in our head, but by writing them down, we organize the goals, right? So that we write them down, and then we can kind of scrap the ones that maybe aren't realistic, and then we get to actually focus on the ones that are realistic. And this actually frees up mental space, because if we're holding all these goals in our head, we can filter the ones that actually make sense and focus on those, and then free up space to deal with other things in our business. So I always say writing down goals, especially financial goals, is a powerful first step, and then in actually realizing them. Okay, so what I like to use with financial goals in particular is the SMART framework. So you may have heard of the SMART framework before. It's a framework used to set goals, and SMART stands for specific, measurable, achievable, realistic, and time-based. So those are the 5 criteria we want to incorporate in any financial goal, so that we have some meat behind it, and then we can it becomes more realistic and achievable. So for an example, say last year I sold 50,000 units for a total value of 250,000. So my total sales were 250,000 last year, because I sold 50,000 units of my product. So then I'm going to use that to set a goal for next year. So then I'm going to set my goal is I want to make 500,000 next year in sales by selling 100,000 units of product. So my goal is to double my revenue. So let's break it down into making sure that we achieve everything in the SMART framework. So the $500,000 in sale, that's very specific and measurable, right? We have a number tied to it, rather than I want to grow my sales next year. We're putting a specific target in place. I want 500,000, which is double next year. I state the time frame, so next year, so that shows that it's time based. And then I say by selling 100,000 units of products, for me, that's achievable. I think that I can double my sales. Maybe I have lined up more distributors next year. And yeah, I feel that's realistic for my business. So this goal is specific, measurable, achievable, realistic, and time-based. So again, jot this acronym down, and then use it when you're starting to set financial goals in your business. And, right now it's November. It's a really great time to start writing down some goals for next year. So, think about maybe after this course, write down some high level goals, and then use this framework to make sure the goal is realistic. Okay, so here are some common financial goals to set. So again, like I said, November, we're almost at the end of the year. We're almost at the beginning of a new year. So really great time to set some financial goals. So common financial goals that, I like to set with my clients when we're working together. What sales do you want to achieve next year? Maybe in 3 years, maybe in 5 years, maybe in 10 years. Like, where do you want to take this business? So write it down. And even if it's completely out there, at least you're putting it down on paper. And then you can look at it and decide whether it's realistic, and then start thinking about what you can do now to achieve those goals in the future. Number two, how much profit do you want to earn in your business, right? So many of us who are business owners, that profit is going to help pay ourselves and compensate ourselves for the effort we put into our business. So it's very important. So you can either be specific in how much you want to earn out of this business, or you can put it as a percentage of sales. So once I've written down, so say in this example, I've written down that I want to make $500,000 in sales next year. I can either say in absolute terms, and I want to come out at the end of the year with maybe $50,000, or I can state it as a percentage of my sales. So maybe I want to say no matter what, at the end of the day, I want to earn a 10% profit margin. So whatever sales I make, I am targeting that 500,000, but at the end of the day, whatever sales I do achieve, I want to come out with 10% bottom line that I get to keep in the business. So think about that too. Number three, how much do you want to pay yourself from your business in the short term and in the long term? So again, kind of tied to profit. So we earn a profit in the year, but maybe that can either be before we pay ourselves or after we pay ourselves. So, but the two are connected, right? So how much money do we need to take out of this business to sustain our lifestyle and the things we need for personally for our personal finances? So, write those down too. And then the next step is link it to the profit and link it to the sales to make sure it all aligns. And then the last question, it's always good to go as far out as possible to think about where do you want to take this business and what is your end goal? So a question I like to ask people is, do you want to sell your business one day, right? That's important, because if you do want to sell your business one day, the sooner you get to knowing how much do you want to sell it for, will kind of tell you what you need to get to. And, if you do have a target in mind of how much you want to sell your business for, right, that number will be based on the sales and the profit. So the sooner you can really hone in on what those numbers are, the sooner you can start to work on actualizing those numbers so that you're prepared and your business has really gotten there in that time frame when you actually want to sell or exit your business. And if not, if you don't want to sell your business, it's still good to know that. But then you probably want to say, I want to keep this business, but I want to generate X amount of cash from it every year. So again, that's an important thing to know so that you can start working towards those goals. Okay, so let's move into financial planning. Sorry, my keyboard is really sensitive again today. Okay, so I really like this quote, very relevant for financials. If you fail to plan, you're planning to fail, right? So, if you have some, high level targets that you keep mentally, but you don't put a plan in place behind them, they're very, maybe you will achieve them, but there's a smaller probability that you will achieve them. There's a higher probability that you won't achieve them and therefore fail if you measure against what you did want to achieve, right? So we want to put a financial plan in place that allows us to succeed and achieve those goals that we have set for ourselves and written them down and formalized them. Okay, so what is a business financial plan? You might have done one when a lot of times when you're about to start a business, you write a business case, a business proposal if you're looking for funding. So part of it is putting some financial numbers down, right? And if you're ever going for financing, a lender would want to see this. So what is it? So it's really, I like to call it a blueprint for my business, right? Like the same way as a blueprint, if you're building a building, you need a blueprint. And the same way, if you're building a business, you need a financial blueprint, which is your financial plan. What it does, it allows you to take a step back and look at your entire business from that 10,000-foot view, right? Which is, I think, a really important activity to do, because a lot of times when I work with business owners, I see that sometimes we're so in the weeds that we don't take a step back and look at everything entirely and then don't appreciate what's actually important and what's maybe less important. So putting a business financial plan really allows us to look at the entire business and then start to understand what's going on holistically, and then actually helps us make decisions and put actions in place to make our businesses more financially successful. So it holds a lot of the key financial data for your business, things like sales, your direct costs, your overhead expenses, your profit, your cash flow, all the important financial pieces of your business. And it's, again, covers it's specific, very specific. So we're defining specific periods as we're laying this plan together, right? And usually you do at least 1 year, and 1 to 3 years is a great measure to do. Maybe the first year is very detailed, and then for year 2 and 3, you can do maybe less detailed, but baking in some high level assumptions, like I want to grow year over year by 10%, and then you can create your annual numbers for year 2 to 3 based on those. So I'll show you what that looks like when we go into a template. But why is this important? So, it really gives you a guide with targets, so you then know what you should be working on for the next year. Whenever I build a plan with my clients, I always see that, they have that aha moment, like, oh, this is how much I can make, right? Because as I mentioned, sometimes you're very much in the weeds. You're so focused on looking at things compartmentalized, but you take a step back, and when you see all pieces put together, you really see the potential of how much you can make, right? And then based on, if I focus on these things, this is what my business could look like. So see the potential, and then it really gives clarity on where you should focus. And then it shows you how to create value in your business, right? So when I say value, I mean profit, and then profit compounded year over year leads to value in our business. Okay, so when we're talking about financial planning, really important component, and there are several key stakeholders that can really support you if they see a well laid out and defined plan that's achievable. These key stakeholders can help you and support you in ways that you need to reach those goals. So who are those people? So the bank, if you need financing, your team, and you don't necessarily need to share all the details with your team, but maybe even, sharing your high level sales targets once you have those, and maybe high level sales targets breaking down by products, right? That can tell them what you're expecting them to do. Of course, if you have business partners, you should be working on this plan together, so you're all on the same page. If your plan might tell you that you need some outside capital, and maybe loan financing isn't possible, or you don't want to take out a loan, so then you might have to go to outside investors. So, they'll need to see a financial plan. And then last, I like to say family, because, I think as business owners, I know that you're all working very hard in your business. And so if you can share some key numbers that really kind of bring other people in, like other people that are seeing you working so hard, bring them in to understand what you're working towards, that can also support you to keep working, and they can understand what you're doing. Okay, so as I mentioned, we're being specific when we're putting a plan together in terms of a specific period of time. So if you're not sure what kind of time frame you should do, there's short term and there's long term. So when we're talking about short term, that's usually 1 year or less. And, because the short term is more predictable, we can be more detailed and more granular, right? Because we know more, there are more factors that are known than unknown. We probably can really predict our expenses, We know our product costs. We know who team members we have. We know how much it'll cost to do certain marketing initiatives. So a lot of that we can really put detailed, granular initiatives, and then we have, there might be some predictability in our revenues, because we can likely predict our revenues based on our current revenues, and then build some different scenarios so then we can decide how much we should spend in the future based on what worst case, best, a medium case and best case looks like. And then you look at those numbers to kind of make decisions. And then there's also, it's also important to do long-term planning. Again, really, like I mentioned, to see kind of understand, you might have some high level goal, like this is how much I want to eventually my business to be worth or to be making. So really doing a multi-year plan to see how you can get to that number eventually. But when you're planning more long-term, it might be more high level. So again, it might be a full year plan rather than month by month. And it might be less detailed. You might just have some high level sales targets, high level expenses based on how much you're currently spending compared to your total revenue. And then you might just use some assumptions to make some higher level estimates for future years. And then again, when you're thinking about how many years of a plan should I make, sometimes it'll be determined by someone who needs to see these numbers. So often, if you're applying for a loan or you're looking for investment, the investors or the bank will tell you, can I see, right now I've seen a lot of, can we see your 3-year financial projections? So sometimes it'll be 3 years, sometimes it'll be 2 years, sometimes it'll be 5 years. So again, if there's a specific request, then you need to build the financial plan catered to that specific request. Okay, so I'm going to show you, and I'm going to do a demo of a template I've built. So you can use this template to create your own financial plan, and how it's a Google document. So and it's a public document. So just reminding you to save it directly to your hard drive or Google Drive to edit it, because you won't be able to edit it. And then you can use this template, and I'll show you how to use it. And then it'll also be included in the link when this video is posted. Okay. And can I just confirm that you can see the link? The Google Sheet? Okay, awesome. Okay, so this is a business financial plan that I often share with people if they've never created financial plan for themselves. And so what I will say, I've made it so anyone can use it. So it's a standard template. So then what I always encourage people to do is, change it to customize it to your own business, right? Feel free to make changes. This is just what I've laid out so it can relate to anyone's business. And I've laid it out so it's an annual financial plan. So it's good to do. So right now is a great time actually to maybe start building one for what your 2025 is going to look like. So here you can put the name, the year, and then you can name this tab 2025, and then you can copy and paste it and create following years as they happen. So maybe halfway through next year, you'll want to build 2026. All right. So the part 1 is about sales, and I've listed the steps here too, so that anytime you come back to it, you can get a refresh on what you need to do. So here is my sales table, and this first part is per unit, and then the second part calculates what that means for total for the year. So here, I will put in my different products or services that I sell in the first column. And then, so let me just put say I sell candy bars, I'm going to put candy bars here. And then I'll put my chocolate bars. Okay, so say, so then I put my unit sales price, right? So I know different channels, you might have different unit prices. So you could even just put candy bars website. So these are ones I sell directly off my website. And then if it made sense to do candy bars retail, because that's a different price. If it's going through distribution, then you can list that as a different product. So here I'm going to put my unit sales price. So say my candy bars sell for $8 per unit, and my chocolate bars sell for $15 per unit. Then I can list my unit costs, right? So I might want to put another table on the side where I bring in my direct costs. And I might want to put my ingredients, my packaging, production, and any other cost, shipping, distribution. But right now I'm just going to do that. But here I'm going to make an assumption that my candy bars cost $3 to make, and my chocolate bars cost me $5. And then now I'm going to start thinking about the total for the year. So here I'm going to put, okay, how much do I want to sell next year, right? So I might go back to, I might look at some data over the last few years to see how many I've sold in the last few years. But say I'm going to say that my target volume for next year, for the full year, is 10,000. So I'm going to put 10,000. And then here it calculates my total sales of selling 10,000 units, which is unit sales price times target volume. And then my gross profit, which is unit sales price minus unit cost times my target volume, will give me my gross profit for that product. Chocolate bars on my website say I'm going to plan to sell 2,000. And so then I'm going to see that my total sales for the year is 30,000 on those chocolate bars for my website. My gross profit will be 20,000. And here I can see my margin that I'm going to make on each product. So my gross profit margin is gross profit divided by total sales. And then the same thing for chocolate bars. And then here at the bottom, it'll total all the products, individual sales and gross profit. So now I can see that from my website, based on these volumes, I am targeting 110,000 total sales and 70,000 gross profit, for a net gross profit margin of 63.64%. Right? So then I can start, right? When I see this, I can maybe play around and tweak it and say, okay, actually, that looks good to me. But if I was plan on making 200,000 on sales, it'll tell me that, oh, actually I need to sell about double the volumes, right? So I can start seeing holistically what the full year looks like. How do what I had in my head actually look in terms of revenue, and then go and make some changes based on some numbers I actually want to see. Maybe my gross profit margin is lower than expected, so then I need to go and dive in and say, where could I potentially lower my costs, or then do I need to increase my unit sales price, right? So I can start to see how things roll up in a total year, and then what I could potentially do to get closer to the numbers that I want to see. Okay, and then the next part, and again, because this is such a standard template and can use to anyone, I've just split it between direct sales, direct costs, and then total overhead expenses. So in part 2, I can start to list my business expenses. So say I'm going to spend $10,000 in marketing for the year. Say I don't have any rental expense maybe I'm going to spend $10,000 on contractors for the year. Maybe I want to pay myself a salary of 50,000 next year. I'm going to have 2,000 of office expenses. Oh, and here I've put owner's salary, but I've just put it in there. And again, these are just a few things. Feel free, there's lots of blank lines, so you can add in any lines of expenses you have, and you can also be more detailed. Maybe this is my email marketing. And maybe I'll want to also put in social media marketing or marketing contractors. So feel free to change any lines as they relate to your business. What you see at the end is a total. So now I say, okay, wow. So I'm based on everything I'm going to spend this year and take out the money, that's going to be 72,000. And then in part 3, it's going to calculate my total profit. So it's going to pull my total sales from the sales table. It's going to pull my gross profit from the sales table. It's going to pull my total expenses and tell me that actually I'm going to make a loss. So that in brackets means a negative number. So actually I'm going to make a loss of $2,000, right? So what does this tell me? This tells me that maybe some things need to change in my business if I actually want to make a profit this year. And then I can start to make decisions about what I should do. And when looking at making changes, I always say start from the bottom and work your way up, because the last thing you want to do is increase the sales price. So you want to see, what can I do internally first? So the first place I would look is if I can reduce any of my expenses, my overhead expenses. The next place I would look is to see whether I can reduce any of my direct costs. And then the last thing I'm going to do is say, okay, there's nothing else I can do. I'm going to need to increase my unit sales price. And, I know, especially in a lot of like the industry we're talking about, it's competitive. And it's like if you're selling into groceries and you have distributors, there's less control. So again, that's why it's really important to manage costs as much as possible before going to unit sales price. But at least, knowing this and seeing the data allows you to then confidently have these conversations with customers, because you can see the numbers and I know that I can't sustain this business if I don't make a profit. So if I've done everything I can in my control, and this number is still negative, I do need to go and have some conversations with my customers and say, these prices are not sustainable. I cannot afford to be in this business unless my prices change, right? And then, it also might make me make some decisions about what products I sell, because maybe my chocolate bars, is a more profitable product. And if I sold more of the chocolate bars, maybe I could sustain my business. So then I can go and say, okay, how do I actually maybe what I do need to do next year is sell more chocolate bars and sell fewer candy bars, and, start thinking about ways that I could change my product mix with my customers, right? So all important data-based information that we can see from this plan that allows us to really work towards building a profitable business and then achieving those goals that we've set for ourselves. So I'm just going to take out all the information here so that when anyone comes to use it, there we go. But hopefully you understand this, and then we can go into questions in the end if you're already playing around with it. Okay, so then I'm going to go into the next section, or back to the presentation. Okay, so yeah, I encourage everyone to, play around with that template if you've never done an exercise like this before, or maybe you've done it, maybe you did it initially when you set your business up, but you've never done it since then. So um, feel free to use my template or build your own if you're comfortable doing it. But again, like I said, now is a really good time to start making a rough plan for next year. And then after that, what do you do? So like I mentioned, it'll give you some information so you can start to make some data-driven decisions now that will allow you to get ahead of achieving what you want to next year. And then, the document isn't something that you just do once and you file away. It should be a working document. So revisit the plan every month, look at how you're tracking against this plan, change the plan as things change in your business. So it's a live document that's relevant. And then, so a monthly basis, look at how you're doing. So look at your actual financials, compare it against the plan throughout the year, and then at the end of the year, right? At the end of the year. So lock in a plan that you made, maybe have another file that copies it that's changing every month. And then at the end of the year, so sit down and compare what your numbers actually ended up being versus what you set out to do. And then that will inform how you plan for the following year and hopefully give you, you get better and better at planning every year, and you'll get more accurate at getting to a number that you wanted to, right? So next year you might look and go, wow, I really didn't get anywhere near what I set out to do. But then, go further and dig deeper and say, okay, what was actually different between my goals and my financial plan and what actually happened, right? So as specific as you can be, do a little bit of detective work. So was it your volumes? Was it your pricing? Was it your cost of goods sold that were a lot higher than what you had put in your plan? Or was it your overhead expenses, right? And what exact detail, go into the details, look at the differences, and then you can make decisions, make any changes you need to make in your business, and again, then make a better plan for next year and get yourself closer to achieving what you need to achieve. So continuously update that plan, adjust it so that you can have a real live view of, right? So as time goes by, maybe I create this plan now, and then, January comes along, January finishes, and I know some things have changed. Maybe my pricing has changed. I'm spending more money. I've hired some staffing, so I'm going to adjust my plan. Once I adjust it, I can get a better understanding of what this year is going to look like. And every time something changes, I'm going to adjust it so I understand high level how much profit I will actually make this year. Okay, so now I'm going to tell you more about how to do that. So let's talk about tracking our finances throughout the year once we've created a plan and creating a dashboard, using a tool like a dashboard to really keep yourself ahead of what's happening, so that you can be ahead of challenges and ahead of things that are getting you off track to get on track sooner. So I'm going to introduce using a financial dashboard, right? What a financial dashboard is a summary of the most important metrics that you need to keep track of on a regular basis that give you information of whether you are on track to achieve your goals and give you information of how your business is performing, right? So this can hold financial and non-financial data, right? We're going to use it to make data-driven decisions. This tool can be manual or it can be digital. Just find something that works for you. So I like this quote, what we give our attention to grows, right? So we want to, we've set these goals, we've put a plan in place, but we want to give our attention, right? Nurture this plan and these goals by looking at it every month so that eventually at the end of the year we will achieve these goals and this plan we've set out for ourselves. And so this dashboard is one of the tools that's going to help us nurture the goals and the plan. Okay, so having a dashboard is going to give you clarity on what to look at, right? So you're going to spend some time to really in advance say, what do I want on my dashboard? What's important that I measure every month? One of the things is cash management, especially for product-based businesses. So it's going to help us be more effective in our cash management. We're gonna see things in real time as they're happening, and see how they're affecting certain metrics in our business, which is gonna allow us to act quicker, and make better decisions based on the actual data. And then we're gonna act quicker because we're looking at things on a regular basis. So we're gonna look at our expenses, our sales, our profit, understand how these things are changing based on what's happening, what actually is happening in our business and the greater environment, to really work on getting to the financial results we desire as things change, right? And really keep staying resilient in our business. Okay, so what tools could you use to maintain a dashboard? So I always say, if you're just starting out to do this, it doesn't have to be anything fancy. I always say, like, start with the most basic thing. And then if you outgrow the more basic tool, then move on to a more advanced tool. So Excel is a great tool to use at the beginning. There's so much functionality. So, always as a business owner, if you can use Excel, like for basic things like basic math, spreadsheets, creating reports for yourself, it's a great tool to start with. If you use a bookkeeping software, which I always recommend, there are some basic dashboards there too, and you can now set those up and customize those based on what you want to see. So if you like that function, if you like the functionality and the information that's giving you, you can use the dashboards that they provide. Just keep in mind that means that you have to make sure that the data coming out will only be as good as the data going in. So making sure you're updating your books and sending good quality information in so that you have good quality dashboards to make decisions off of. And then there's advanced financial planning and analysis tools. So I've listed a few that I've used in the past. I've used Giraffe, Fathom, Sift. These softwares are probably better suited for a finance professional, but what they're really good at are they integrate with advanced bookkeeping softwares like QuickBooks and Xero, and they have a really nice, they do reporting and forecasting. So QuickBooks and Xero is really good for inputting data and giving you reports on historical information. But if you need to continuously be looking at what's going to happen in the future, and it's a bit more, you have more complex drivers, things are always changing, excuse me. There are some more advanced tools you can use to do forecasting continuously. And then another key functionality is they have more reporting functionality. So, when I'm as a CFO for certain clients, I can do a monthly financial report that's a template, and it'll give me information like have a standard package of reports like my profit and loss, year to date, monthly, but then also, pull in some of that forecast data I've put in so that I can kind of see, like, gives me things like a rolling forecast. So what's actually happened year to date. And then based on my forecast, what does the full year look like? So there's more advanced functionality in terms of forecasting or reporting that the basic bookkeeping software. But I'd say these tools are needed for businesses that if you are over several million in revenue, then I would recommend those tools. But if you are under a million, maybe Excel and your basic bookkeeping software will be enough. And yeah, again, like I said, those more advanced tools, they're probably more suited for if you do have like someone on your team that is dedicated to working on the financials. Okay, so I want to spend some time talking about key performance indicators or KPIs. So what are they and how can we use them in our dashboards? So KPIs are something that we measure to determine, it gives us kind of like, it's something that we measure that tells us how we're tracking against our business goal. So it can be financial or non-financial, but usually it's a numeric metric. So we are looking for key drivers that we can control that impacts a greater outcome or goal. So for example, say I have a goal of, I know the way to grow my company is to increase my sales. So I want to increase my sales, but I know that to increase my sales, I need to increase my revenue per customer. So every time I have a customer maybe on my website or maybe buy one of my products at a shop, I want to get them to buy multiple products. And that's really how I see my company growing. So if that's the case, then I'm going to think of, okay, what's a KPI that will tell me if I'm actually growing my revenue per customer. So then I'll say, okay, I actually want to keep track of average order value, right? That's a metric of my revenue per customer. So that's total sales in a period over total orders in a period. And if I keep track of that, and if I see that number growing, I know that I'll be increasing my revenue per customer. And then I know that will lead to my sales increasing overall. So example of a KPI that's, something that we can keep track of, something that we can influence, because then we'll put strategies in place to make sure that that metric is always increasing. And that's how we're going to increase our top line in totality. Okay, so let's talk about the different elements of the KPI and then use this example of average order value. So there's different elements of the KPI. So one, what are we going to measure? So right in this example, we're going to measure, so defining the things we're going to measure. So we're going to measure, I want to know my average sales over the period and total number of orders over the period. And then setting a target, right? So what is the number that I want to get to that if I get to that number, I know that my sales are always growing or I'm achieving the sales target that I need to have. And so I've defined that I want my average order value to always be $50. Okay, then we need to define the source. So where will we actually get this information from? And what's the process for tracking the data? So I've said that, I know both these data points are in Shopify. I know I can get my total sales for any period, and I can get the number of total orders from every period. And the great thing is in my Shopify, this is all automated. I don't actually need to do anything manually. I just have to manually pull that information, but the information is calculated automatically based on the sales. If you do have multiple sales platforms, then it might be compiling sales from different places manually to then understand what the metric is altogether. And then the next thing is defining the frequency. So I want to keep track of this on a monthly basis. And then the action what am I going to do with this information? So I have a target of $50. So then I need to define if I track it next month and it's under $50, coming up with new strategies to increase that KPI, right? So what activities can I do to make sure that every time that on average, when someone buys a product online, their average order value is $50, right? It's a very specific, I can then start to think about very specific things I should do to focus on to try to get that number to where I want to be and know that I'm on track to achieve my overall high level targets and achieve my financial plan for the year. Okay. So here are some common KPIs for CPG companies. So if you're not sure which KPIs are relevant for you, you can think about whether these are. So gross profit margin, and yeah, I would say most of them are probably relevant. So we've been starting, if you don't know where to start, maybe calculate these and track them. So gross profit margin, of course, very important. We want to make sure that our business is profitable when we sell, that every product we sell is profitable. So that is my total gross profit divided by my total sales. We can also do it by product. So our product sales, product gross profit divided by product sales. We talked about this in the last module, so feel free to go back to that one. That was financial language. Inventory turnover days. So this is an important one. How many days does it take to turn over inventory, right? Because we know there's a lot of cash sitting in our inventory, and the quicker we turn it, the sooner we have cash to then buy more product and invest in new product development and marketing and sales. So we want our inventory to be turning over as quickly as possible. So keeping track of our average inventory days over time will tell us, is our inventory slowing down or is it quicker, right? And different periods might have different inventory turnover days, but collecting this data will allow us to kind of see patterns, understand, and then once we understand the patterns, we can kind of start to pick out when there's a downturn and then work on getting that up. So how do I calculate this metric? It's my average inventory held over a period, divided my cost of goods sold times 365, and that will give me a value in days, right? So if I calculate this metric month over month, I can see if I'm getting better at turning inventory over or slower. Customer acquisition costs. So how effective is our marketing and sales to acquire new customers? How efficient is it? So this is my total cost of sales and marketing in a period. We can also just maybe look at one piece of spending, divide that by the new customers in the period. So that will tell us how much do we spend to acquire a new customer, right? And again, over time, we want to get more efficient at this. If this is very expensive, then, our business might not be efficient. So the lower this number is, the more efficient we are at converting our marketing and sales to acquiring new customers. Trade spend efficiency. So if you sell in grocery stores, this is really important too, right? To keep track of, if you're getting billed for trade spend, is it actually effective in generating new sales and gross profit? So how we calculate this is we take incremental gross profit. So if there was a period where we had trade spend, how much, what is the incremental gross profit from this trade spend? We subtract our trade spend and we divide it by our trade spend. So this kind of tells us for every dollar of trade spend, how much money do we convert into gross profit? So, take note of these, maybe go and calculate them. And then the way to understand whether these KPIs, which are the right ones for you, is just do some, it's kind of takes some research. So maybe keep track of certain KPIs for a time and then look at, and then also keeping, and then comparing them against, you know, things like total sales, gross profit, profitability, and seeing if you have a set of data for over some time, start to see if there is a correlation, right? Does my profitability increase when my trade spend efficiency increases? Yes, it does. Okay, that tells me that trade spend efficiency is an important metric to keep track of, right? So we need to do some detective work to see which KPIs are actually leading to moving the needle in our business. And then if we keep track of them over some time, we can start to see, and then we can maybe start to understand, you know, in a month where we see the metric moving positively with our overall financials. And we can also identify what that KPI number was when we had a good month. So then that can help us set targets too. Okay, I know in this month, my profit was, you know, I achieved a 10% profit margin and my trade spend efficiency was X. So that's going to be my target. That's what I want to work towards every month so that my profit is aligned with my goals. Okay, so how to choose your own KPIs. I've talked a little about this, but let me talk again. So defining what objectives we have. So having clear objectives, you know, is really essential so that we can obtain actionable insights. So for a CPG company, establishing specific achievable targets that will enhance, you know, sales, streamline supply chain, enhance customer effectiveness of acquiring customers. And then also another important thing is customer satisfaction, right? So these don't always have to be financial metrics. You can bring in other KPIs that you know are important, like customer satisfaction and equality type measures too, right? As long as there's a quantitative way of measuring them. Then identifying relevant metrics. So once the goals and objectives are defined, identify metrics that are relevant to those goals, right? So what are my goals? Which KPIs will actually move the needle on sales, revenue, supply chain, customer marketing? And then setting realistic targets. So this is how we can enhance performance by actually achieve the goals that we want to, right? So these KPIs, the targets that we set will actually allow us to achieve those high level goals we set out at the beginning that we talked about at the beginning of this course and under the SMART framework. So it all links together and it should all link together. It might just take some time to dig in to understand which ones are important. Okay, so moving over to KPIs are part of this dashboard, but how do we actually create a dashboard for our business? So I'm going to talk through steps and then show you an example that you can use too. So create tangible targets and goals for our business, right? Using that SMART framework that we talked about at the beginning, deciding which metrics to track and where and how to collect the data. Again, we might just track everything at the beginning, and then once we understand the correlation between some, we can take some out and focus on the ones that we know are correlating with those higher level goals we have. So what I recommend is chart all metrics and goals on a spreadsheet with specific timelines. You know, we want to know the frequency of how often we're going to track these things. You know, important to then regularly track these metrics, put them on a report, and then compare them against our targets. Then we take action based on these results. Okay, did this metric, is it in line with my target? If I overachieved, okay, what did I do to overachieve and what should I do? Why did I overachieve? and what activity should I continue to do so that I overachieve. And on the other hand, why did I not achieve? Why am I under my target, and what specific actions can I take so that next month I can get closer to that target? So, right, this is a continuous process. It's a system we want to bring into our business, because it's going to move the needle on our total sales, profitability, and the value we create in our business, right? And I know that as a business owner, sometimes financials are the last thing on the list. This is always the last thing on the list for many business owners. So, having an accountability partner, someone that you can you can have accountability to do these things on a monthly basis, whether it's hiring a consultant or, working with some peers, meeting with them to make sure that you have some accountability to keep on top of these things. Okay, so when we talk about a dashboard, I'm going to show you a template in a minute, but here's a view of what information I would recommend including in your dashboard. So number one, I like to always start with high level profit and loss statement. So what were my total sales? What were my total expenses? What was my net profit for a period? Then I'll lay out some KPIs and keep track of those. Then I think a summary of cash flow is important. So let's look at how much cash did I start the period with, how much cash came into my business, how much cash went out, and how much cash did I have left at the end of the period. And then again, any other important financial, non-financial metrics that you think are important, that I need to look at these on a monthly basis because they're really going to drive the performance of my business. And if I know the results of these things, I know that I'm moving in the right direction, right? So anything like that, really important to include in this dashboard. Okay, I'm going to show you a basic template you can use if you want to create a dashboard. Oh, and I actually will put the links of those two sheets in the chat. So this is the link to the financial plan. And this is the link to the financial dashboard. And I will share that on screen right now so we can look at it together. Okay, so basic financial dashboard template. Again, it's a public Google Sheet. So in order to edit it, you'll need to download it or save it to your own Google Drive. So company name, financial year, and then here is how I would lay out a high level profit and loss. So I always like to look at this year. I think it's important to look at the last month that just happened and then year to date. So it can be the calendar year or your financial year. What is my total sales and total profit for the month and year to date? And then, like I mentioned in the financial statements module, we need to, if we look at any numbers individually or in a vacuum, they don't really tell us anything. So, a good comparison is, okay, how did I do last year for the same month and year to date? And then looking at the variances, and that can give me some information, right? Then I can start to make some observations. How am I doing against next year? Am I up or down? And what does that mean for my business? And is that in line with what I'm expecting? So first thing I like to look at when I'm doing a monthly review of a business, how are they performing overall in terms of profitability? And then here I've put a section for KPIs. So I've laid out every month, and then I'll put in my KPIs here. And maybe I'll start with just putting targets in for every month. And then every month, as the month happens, I'll put in the actuals so that, and then I can see how I've done in the last month. And then as time goes by, I just update every month and I have all the historical information for the previous months too that I can compare to. So really it gives me good information. How has this KPI been tracking? And then I can start to compare it to sales, my year-to-date sales versus last year, my net profit, and how are these KPIs influencing these numbers. And then the third section, I really like to keep this short and sweet, so it's actually manageable and realistic for someone to do on a monthly basis. So cash flow every month. How much money did I start with in the month? How much money came into my business, how much money went out of my business, and what was my ending balance, right? So if you have one bank account, you can get just this information from your bank statement. You can just pull the balance, because your bank statement usually has a summary of the money that came in and total money that came out. And so, a lot of these things are, if you have a bookkeeper in your business, they would have this information. So, maybe you can ask them to help you populate your dashboard, and maybe some of the KPIs you need to do manually. But really, I think it is really important to do something like this on a monthly basis. So figure out how maybe you can delegate some of the stuff in this so that you can actually get it done. So yeah, that is a simple dashboard. And again, this is just something very basic that I came up with, and so that anyone can use it, but feel free to customize it and change it to something that makes sense for you. Like, how does your brain process information? That's really important. What else? If there are other things that you really want to see and include, by all means include them. I just said, okay, at the very minimum, look at this stuff. But yes, add in anything that you also think is important. Okay, I'm going to just go back to the slides briefly. Okay, so once we've created a template of what our financial dashboard can look like, what do we do next? Again, maybe we'll put something together this month or the next month that we want to keep track of in next year. So, set a timeline, maybe put in our calendars time for us to populate the data, maybe delegating tasks, creating a project and allocating some of the tasks to different people on your team if that's available. Scheduling financial reviews, so schedule actual time to look at the information so that it actually adds value to your business. And then use the information to make decisions and take actions in your business, right? So this is what successful businesses do, right? So if you kind of look at some businesses and think, oh, like they're as businesses you want to mimic, and oh, they seem to be so successful, they're kind of what I want to achieve, right? This is what they're probably doing. It's such an important role that leads key part of business management that leads to success. They're planning continuously, they're monitoring their plans, always looking at actual results, comparing to actual results, and then making proactive, informed decisions based on financial data, right? And they're probably not doing this alone. They're leaning on professional help to make sure that these things are happening, to always, it's just you're more effective because you're focusing on the things that matter, and you are actually keeping track to make sure that you're having a direct impact on the things that matter, and the things that matter are moving up, and that's directly impacting your profitability. Okay, that is the end. That was a lot of information. Thank you all for joining today. I always like to say, I'm really enjoying this. It's really nice to see familiar faces coming back, but feel free to send me an email if you have any questions. We'll take some time for questions now. And I also would really love to hear any feedback and testimonials. We can connect on LinkedIn or you can email me a testimonial. I would really appreciate that. Okay, I'm going to stop sharing my screen and we can go into questions.
Good morning. I don't have an actual question. I just want to say thank you. These sessions are very valuable. We're starting a new business and I do have a little accounting background. So I will be making good use of this and I will be emailing you. I'll be bothering you lots. I hope you don't mind.
Oh, yeah. Perfect. Well, thank you so much. It's nice to hear that it's helping, right? That's my goal here. So yes, congratulations for starting your new business and feel free to reach out if you have questions. Lindsay, you had some questions. Are there common mistakes you see entrepreneurs making when doing this financial goal setting? So yes, I think the common mistake is, and it's not necessarily a mistake, is, I think when we start our business, we have maybe some very ambitious goals, right? And what I'm seeing now is there's like so say we want to build a multi-million-dollar business. There's many steps in getting there. And sometimes maybe if we're focusing on getting 5 steps ahead, and what we actually need to focus on is the next step. And that's how we can really grow, right? So, recently I was working with someone and they said, we want to be a 7-figure business, but right now, if they're 5, actually, we need to talk about how do you get to that next milestone, which is 6 figures. And really, what can you do? Because sometimes you can get lost if you're really small and just trying to become really big, but actually, you can actually get to maybe doubling your business and be more focused and how to, because that's a different hurdle. Like getting to say $250,000 is a different hurdle than getting to several million. So really getting really specific, and then that will allow you to build strategies and be more realistic in getting you will eventually get there, but it's just several steps away. And so focusing on the next step rather than 5 steps ahead. Does that make sense?
Yeah, that's great. That's super helpful. And I can see that being a common thing, getting way too ahead of ourselves sometimes.
And then how can entrepreneurs tailor financial goals for different business stages, such as a startup phase versus a growth phase? Yeah, again, I think it's like the same thing, right? It's every business, there are certain metrics, like when you're a startup, when you're growth, sometimes like growth is after 1 million, but I think now how I'm starting to define these phases is startup is when you don't necessarily know, you're kind of trying different things and you don't necessarily know how, like you haven't sold enough in a systematic way. And then growth is when that's starting to happen. Like you have a marketing system in place and if you put more money in this marketing thing, then gives you a return. And like the more you put in marketing and do these certain activities, you see the correlation between your sales. And then scaling is that when that happens on like an exponential basis, right? Then you're more effective, like you're 10xing your sales because you really know how every time you do an activity, and if you do that activity in like 50 times more, that it's going to 50x your revenue. And so again, back to those skipping to 5 steps is like really, I see, if you're starting out, like focus on, you're not going to know at the beginning all the things, but the more you can do to like grow smaller, but really understand who's buying your you're gathering information. Who are your customers? What are their habits? When do they buy your product? Why will they buy your product? Like that I really see as a startup stage, like that product market fit, right? And then once you have that product market fit, then you're from scale to growth. So then product market fit plus the ability to really know how or really know how you can achieve a return on your marketing and sales, then you're into the scaling business. That's how I see it.
Great. And we'll just give like another like 30 seconds just in case there's any other questions. And if not, then we'll wrap right up. Okay, seems like everyone's got their questions answered, which is great. Thank you so much, Tahira, for that presentation. It was super informative. And thank you to everyone who attended our session on Money Matters today. If there are any other questions, you can reach out to Tahira. And of course, the recording for this session will be on our website, the Feed website, by next week. So I just want to remind everyone that our next session, product pricing and costing, will be at the exact same time next Friday, November 29th. So mark your calendars and we look forward to seeing you guys then. Thanks again, Tahira.
Okay. Thanks everyone for joining. See you all next week. Bye. Have a good weekend.